Hello and welcome to Property Question Time. I'm Lucia France and this is a show where we answer all and any of your property questions with our panel of experts. So joining me in the studio today, we have Stephen Galpin. Welcome to you, Stephen, London-based property consultant. We also have Paul Mahoney. Welcome, Paul, Managing Director of Nova Financial Group. And Mike Gray as well. Welcome to you, Mike, Managing Director of Devon Gray Property Consultants. Good to see you all today, guys. Okay, Stephen, you've got the first question here today, which is, I'm looking to invest 30k in a property and I'm not sure where to invest and how tough it would be to get a mortgage, as this would be my very first investment. And I want to start myself on getting a property portfolio. Any advice appreciated?
Right, well, I think the amount of money involved here is relatively low, so that in itself is going to restrict where you can buy. And I just wonder, for a first-time investor with obviously very limited capital here, I wonder whether some of these crowd-funded opportunities may be an idea. In other words, a number of people get together and buy a property for investment as a syndicate. Now, the downside of that kind of thing is it's relatively easy to get into, not quite so easy to get out of. You're probably governed rather more by the market than in normal circumstances. But it is a great opportunity to test the water, to see how you manage a property, to learn from other people who perhaps got more experience than you, and therefore reduce the risk. In terms of mortgage, I don't know. I think, Paul, you could probably answer that one better than I.
Over to you, Paul.
Yeah, a couple of points on that. So in my opinion, I think 30,000 is really the bare minimum to buy anything half decent in the UK. Yeah. And the reason for that is there's not a lot under 100,000 in the UK, and that's the whole country, in decent areas. And obviously with a 25% deposit and some costs, that's where you are about for a purchase price.
Right.
So you're a little bit limited, and I don't disagree with Steve. I think you shouldn't buy for the sake of it. No. If you can find a property that stacks up and is a good investment, then there are mortgages at that level. Yeah. It becomes more difficult to get a mortgage under 100,000 and even more so under 70 or 80,000.
Right.
That's really the minimum that most lenders want to lend.
So in this situation, would you say it's worth waiting and saving a little bit more?
Maybe waiting and saving a little bit more, but they're kind of just getting to the cusp of just having enough money.
Right, okay.
So yeah, something crowdfunding, something that they can maybe invest in that they might get a decent return on over a year or two to boost their funds and maybe save some more money as well. Essentially consider all options and get professional advice on what's available to you.
Absolutely. Anything further to add there, Stephen?
No, I don't think so. I think Paul's right about the mortgages. I think that's absolutely right. And again, just remember, this is a business that you're going into. So if you don't know how to do it, learn how to do it and try and minimise that risk at the outset.
Yeah, take some advice, as we always say.
I think it's just one quick response. The key thing there, as you rightfully said, is also have the ability to getting out of that arrangement. Because if your funds are then built up to do something on your own, you'd want to come out of that first arrangement to move forward. So it's all right getting in, but you need to know what the exit opportunities are.
Definitely. Very good advice there. Thank you very much. Okay, Paul, your first question for today is, having recently paid off our mortgage, we have a chunk of extra cash each month and we're trying to figure out the best thing to do with it. We have two buy-to-lets, one with about 80% equity and the other about 40% equity. Both have very low interest rates and are fixed for 2 and 5 years respectively, with the option to overpay 10% per year. The plan is to use them as a source of income in retirement, but should we pay them off now with the extra money? There are plenty of other things we could use the money for: increased pension contributions, safer school fees, house renovations, etc. We currently have cash savings of about 3 months' salary and about 20k in shares from a former employer. What is the best thing to do with the money we were paying towards our main residence? Any advice?
Okay, that's a good question.
It's a long question.
Conventional wisdom would say that you want to be debt-free by retirement, but I think that's wrong.
Okay.
And that might be a little bit controversial, but especially in the current market, when money is cheap, with buy-to-let properties, you can actually borrow to accelerate your income, not just your growth.
Right.
So they mentioned about having 80% equity in one buy-to-let, 40% in the other.
Yes.
Said they're fixed though, so there's not much they can do about, not much they probably should do about those until those terms expire.
Okay.
But unless these people are extremely wealthy in other areas, and it doesn't seem that they are, I would say that's not enough debt. on their buy-to-lets. They could better utilise that equity in their properties, and they could have more properties, which would give them a better return on their money. So far as what they should do with this money that they currently have, depending on how much, I don't think they mention how much it is.
They don't, I'm afraid. No.
Depending on how much it is, they probably are best off overpaying on the buy-to-lets, but not necessarily to get them to a debt-free scenario, mainly just to add equity to the properties and then remortgage them when their mortgage terms expire or those initial periods expire.
Yeah.
Because, saving, let's say it's £2,000 or £3,000 a month, putting it off their mortgages might save them that 2 or 3% they're probably paying for the mortgages. But with that same money, they could quite easily be getting 10, 15, 20% returns on that cash by investing in property with mortgages.
Right.
So I'd say initially, do pay down the debt, because that's, unless they've got somewhere they can get a better return on it with safety, pay it down, let the initial periods expire, and then seek advice about remortgaging them to take control of the equity they have in those buy-to-lets and reinvest to build their investable asset base.
Okay, so you're basically saying that in the fixed plans that they've got, 2 and 5 years respectively, use that money to pay down the debt.
Yeah, for those initial periods, because there's probably exit fees for those periods. It's probably going to be expensive for them to exit out of those mortgages now. But it's important to keep in mind why we invest in property. It's all about making money.
Yeah.
And generally the end goal is about replacing employment income with passive income. So you really do, especially in that wealth creation phase of life, you really want to best utilise what you have.
Yeah.
And a 20% mortgage and a 60% mortgage, in my opinion, isn't the best utilisation of that resource.
Right, okay. Well, that's and is there anything else that you would recommend that they should do during that time? I mean, do you think definitely pay down the debts?
Well, it sounds like they're comfortable with having 3 months' worth of pay, put away for a rainy day fund. That's sensible. Contribute the extra they have to those mortgages, but have a plan and a strategy for what the end goal is.
Yeah.
I think far too many people go about accumulating buy-to-lets in a very ad hoc way. They kind of just buy them here and there and just hope for the best. Whereas, when we think logically, it's obviously better to have a plan of action and know what we're working toward, because then we're going to have more purpose and direction. So get that in place. Seek advice or do it yourself, or go about it in the way that works for you. But have that and better utilise what you've got, because it doesn't seem like they're doing that at the moment. And that's probably just because they've not really thought about it too much.
Well, it's like you said, that's the conventional wisdom to have it debt-free, but maybe that's not the best option for them in this case. That's great. Thank you, Paul. Thank you very much.
One quick touch on the ad hoc.
Please
I think that's
do,
interesting.
yes.
It does need strategy, doesn't it? It needs thinking it through. And I think when people buy and expand a residential buy-to-let portfolio, they should think it more like it's a little business they're growing and forming. I had an experience from an Essex-based investor that bought 10 properties up in, I think it's Bolton near Manchester, because obviously they were much cheaper and there's a much lower price to buy. They spent the next 10 years, having bought them, they spent the next 10 years frustrated that every time they needed an electrician or a plumber or any maintenance, they didn't want to go up and see it, they're too far. They never got to know or see any of the tenants. They never had any feel about what was going on. And as time went on, they were relying on people to let them, re-let them, manage them that they'd never met before.
Yeah.
So what did they want to do? They wanted to cash them in and come back south and start again.
Well, that's it. It's what we do often say, buy where you know as well, but where you're going to be close to it.
Keep your eye on it.
Thank you very much. Okay, Mike, your next question here is, I'm trying to sell a small commercial property, but it isn't selling. It could be converted back to residential, which it originally was. I think with hindsight that the selling agent may have overvalued it. I'm thinking of trying an auction, but I'm nervous about the method, and if I lose control of the sale, I've read up about it and I don't really like the sound of it. I just wondered if you have people who have used this method to sell and what they think of it.
Okay, this in the first phase of that, this sounds like an ideal type of auction proposition. One, because it could be commercial or it may be residential. So that automatically brings it out to two sort of marketplaces. So let's work on the basis they're right, that it could be either. The second thing, it hasn't sold so far, so they've tried on the market and it hasn't worked to date. So the only fear is that they don't understand the auction process and they're a little bit frightened of it. And that's a natural thing to do. If it's an experience you haven't been through before, you're not quite sure how to support it or go with it. The good thing about a property that you've described is if it could be converted, and some commercial properties now can get automatic change use to residential, and that's usually because some of the commercial properties are now sort of unlettable, or they're in areas where they're looking to encourage residential property to, for example, near high streets, where they want to bring on a nighttime economy for the benefit of the struggling high streets. So what we've got there is not a straightforward property. It could be one or the other. You know, for a non-property term, you know, is it a boy or girl? Which way could this go? so the auction is probably the ideal process. One, it goes out to commercial buyers, it goes out to residential buyers, it goes out to people who might like to refurb it and use it themselves, or it might go to landlords who want to refurb it and find a tenant. Right. So you can see that the avenue of potential buyers is that much greater. So I think what the client needs to do is think about a different process they've not tried before, just to get to understand that. I would suggest they obtain a quotation from an auctioneer in terms of fees and timing, and probably I think that's a clear one to give it a try.
That's great. Perfect timing there, Mike. Thank you very much. That's all we've got time for now, but we'll be back very shortly after this break. Welcome back to Property Question Time with me, Lucia France, and our panel of experts today, Stephen Galpin, Paul Mahoney and Mike Gray. So welcome back, guys. Okay, moving on to the next question for you, Stephen, which is this. My father has sold his house so he can move in with us. Now he's 80 years old, and we have bought a 5-bed house on the basis of his contribution to a bigger property. My father's chain broke down, unfortunately though, and we are committed to buying the bigger property at the end of November. Do you think we should leave it with an agent or put it to auction?
Okay, well, we really need a little bit more information now. I'm not sure what committed to buying means. Do they mean they've exchanged contracts on their new on their new purchase or not? If they've exchanged contracts, then obviously the whole thing becomes time critical. So assuming that that's the case and it is time critical, then I think the easy answer is to say, well, an auction will produce almost an instant result. The difficulty of that is, as I'm sure Mike will tell us, an auction is an ideal way of finding out what something is really worth. It sells for what somebody will pay. Right. Now, that differs from an agent's view, who might be over-optimistic or might even take advantage of the situation and undervalue it.
Right.
So it's a very difficult tightrope to walk, this one. I think in essence I would first of all look at my commitment. If it's an exchange of contracts, it might be just worth having a word with solicitors and see if you can gain some kind of extension on the completion date to give you a little bit more choice. If that's not possible, if your next lot in the chain won't play ball, then I think a conversation with a good, reputable auctioneer would be a sensible option, I think, if you would agree, Mike.
Mike, anything to add?
Yeah, just one little thing, and I think exactly right. It's about, are they committed or not? There's a difference between being under contract already and just going ahead and hoping to buy something. Something that flashed through my mind there with the price differential is if they haven't already exchanged, there's always another way forward that the people they're buying from may actually take in part exchange, like a chain breaking exercise, to take this smaller property in at the end. Right. And even if they let them have it a little bit less expensive, a little bit under the price, what they get is their property sold, and the people selling the larger house at the other end of the chain have an instant buyer, and then they can all exchange contracts. Right, but of course that's all very well, that's only if the people at the end of the chain want to take in a property.
Yeah, I suppose a lot of this,
another option.
This problem is dependent on what people in the chain are happy to do. So okay.
But as you say, if they're under contract already, probably they've got no option. Get it in the auction and in the room in 6 weeks.
Great stuff. Okay, thank you very much, guys. Okay, moving on now to Paul for your last question for today. I seem to have got myself in a fix with my mortgage company. Oh dear. After a period of sickness in which I couldn't pay my mortgage, unexpectedly, as soon as I was well and able to work again, they went to demanding all of the arrears to prevent repossession. Is there a sympathetic company that would consider giving me a secured loan to cover the arrears, as well as perhaps to settle my other debts so that I could start again? Unfortunate situation.
Very unfortunate.
Yeah.
So a bit more information is required to determine their best course of action. Generally, lenders are relatively sympathetic to those situations, usually, and would work out some sort of payment plan or ability for them to get back on their feet, as opposed to just foreclosing, which is obviously the kind of last resort of any lender, because they don't like doing that either, because quite often they'll make a loss on the sale. So the first thing would be to approach their current lender. Right. I assume they've probably already done that, but they may not have. They might have just got a letter in the mail and thought, oh no, I need to go to another lender. So approach the current lender first, speak with them, ask them what they can do for you so far as the payment plan and to work something out. A lot of it will also depend on whether the current lender has defaulted them or whether they have actually given them flexibility already.
Right.
And
sorry to interrupt you, but what they're saying here is that they're demanding all of the arrears to prevent repossession as soon as they went back to work again.
Right.
So
that might have been the flexibility that they've given in the first place.
Right.
Again, dependent on whether they have defaulted them, that will also impact upon their ability to go to another lender. So far as fixing all of this, it will also depend on whether they've got any other assets. Their current financial position, they might have a very high income, and that would impact upon whether another lender might give them a short-term loan, a secured loan, a second charge on the current property or on other assets.
Yeah.
And then there's a very broad range of lenders out there. Lenders that are quite cheap and restrictive, and lenders that will lend to pretty much anyone and are very expensive. Yeah. So the answer is yes, there's an option available for them, but it would depend on the cost, and it could be quite substantial if they've been defaulted, if they've obviously missed a number of payments on their current mortgage. Yeah. There's a number of, I'd say firstly speak to an independent broker, see if they can help you. If they can't, there's a number of sort of money advice type centres that can help with those sorts of things as well. Yeah. So seek out, put your feelers out to as many people as possible, I'd say, and try to solve the situation, because obviously you don't want a foreclosure on your hands.
No, and I think where they're mentioning settling other debts as well, which I take to meaning as in more than their mortgage arrears, that could be the wise way to go.
Definitely an unfortunate situation, but do something about it would be the main thing. Don't just sit on it. Yeah. Make sure you approach as many options as you can.
I think the key thing there, Paul's hit it, is about conversation. Talk to your lender. You will find that they will help. It's not in their interest to see you default. And I think the other thing is, be very careful. You do get these letters in the post, and sometimes they're a course of action that the company regulations, articles of association insist that they do. Identify the loan in total, identify the arrears, give notice that those arrears need to be paid. But actually they're still willing to talk. It might be just a process rather than anything else, and it's important you differentiate between what's process and what is actually practically going to happen.
They might just be trying their luck so far as getting the money from you, and they might actually be willing to be a lot more flexible than you expect.
Good point. Thank you, guys. Okay, moving on to Mike for your last question for today. I'm putting up my house for auction using a local auctioneers. The next auction day the company have is in early December. I'm wondering how quick the process is, including appointment to value the property, signing paperwork, etc. Can anybody who has auctioned houses answer this for me, please?
Okay, that's quite a simple question to answer, to be honest. Let's look at it as an overall throughout the country. Most experienced auctioneers would have between 6 and 8 or 9 auctions a year. So if we average that at 7 or 8, there's one sort of always coming every sort of 6 or 7 weeks. So the turnaround of the auction process is very quick anyway. So I'd like to think that if they chose an experienced firm of auctioneers, from the day of phone call from the inquiry, they would carry out an inspection, report back with the proposals, recommendation on the price, and probably the next auction entry date should be within no more than 4 to 6 weeks.
Right.
Yep. So that's nice and quick.
So that would happen on the first day that they inquired
within
selling.
2 or 3 days of that phone call, they'll have that information. Now, sometimes a little bit about timing, because if they've only had their last auction the day before, it's going to be a slightly longer run to the next one. But it's often a little bit like London buses. There's always another one coming soon. So what I would suggest is the result is still going to be much quicker for somebody who's under time pressure. Most auction lots are sold on the day, so the time the gavel goes down, it's under contract, they complete 28 days later. Now, some people say, well, what about if it doesn't sell? 10 to 15% of the properties that don't sell by auction are then have a sale agreed within the next week or so afterwards. So if it doesn't sell on the day of the auction, you don't have to wait for the next one in 8 weeks. There's a good chance the sale will be agreed afterwards and still under a 28-day completion.
Okay, so
it's a quick turnaround.
In that way, yeah, you could be looking at the whole thing taking, you know, depending on how soon the next auction is, you know, 1.5 months, maybe even that quick.
Yeah, certainly. If you said I was going to set up to 9 or 10 weeks, and if you think that a lot of properties go onto the market by private treaty, and within 8 to 9 weeks they may only have had 2 or 3 viewers. So it's a much quicker process, and you always know where you're going because the auction date is a fixed date, and you know when that's the date it's going to be in the room.
Okay, and is there any other sort of advice you'd give them about putting the house up for auction using a local auctioneer?
Well, I think it's obviously like anything. Do the research on their successful in their sales. Make sure their auctions are held in the correct region where the property is being held, and look at the last 3 auction results of that company. And you want to see that they're coming in with at least 75%. And if they're selling 75% of the properties they take, you've got a more than a 2/3 chance of being sold within 6 or 8 weeks.
That's great. Thank you very much, Mike. Thank you to Paul and to Stephen. That's all we've got time for here today, but if you do have your own property questions and you'd like to get in touch, then please do. It's at property_TV on Instagram, property-tv.co.uk or info@propertytelevision.tv if you'd like to email us. Thank you for watching and we'll see you next time.